CleanSpark is now up over 90% since we called the bottom back in September. I've closed out half of my position here, and I'm still holding nearly $39,000 in profit, and I'm up over 91% on those shares. Now, in this video, we're going to go over why we called the bottom and how you can replicate this across any trade or any stock that you are currently watching, where I think CleanSpark is headed in the next couple of days, and more importantly, where I think this is going to be by the end of the year, because there is actually a chance that this continues to go parabolic. It can maybe even see highs of $23 to $24. My name is Peter DiCarlo. I'm a full-time quantitative trader, and I've been doing this for the past 11 years. I've grown my fund to over $5.5 million. I trade only off of data and my two-step trading system. I don't use news, PE ratios, fundamentals, none of that. To me, all of that is noise. The only thing that drives my actual decision-making is my strategy. And I make these videos because if I would have had somebody like me in my life when I first started trading, I'd be significantly further ahead than I currently am. And I would have saved myself from losing a ton of money. Now, if we go into our trading journal, you're going to see that we only have a 61% win rate since we started doing this publicly, which is more than fine. And if we actually look at CleanSpark, this has been one of our better stocks to trade over the past couple of years. CleanSpark alone, we are up $387,000 with only a 63% win rate. But what's most important is you can see our equity curve is very healthy up to the right. And when we lose very small relative to when we win, we are winning massively. Right now, we have about a 2-to-1 risk versus reward ratio, which means that when we lose, we're losing half of what we win. That is the most important thing when it comes to trading. Now, we're going to talk about how we ended up entering this position and why we saw this breakout happening. But everything that we're going to be going over in today's video is going to be for free, and you're going to be able to take a course going over this exact system. Our entire system and all 10 courses will be down in the description, but the Smart Money Mastery course specifically is going to be the one that's going to teach you how to spot these smart money zones and how you can actually draw these and get these on your chart, as well as all of the other indicators. Now let's go back and take a look at what CleanSpark was doing in September and August. We're looking at a daily chart right now. And the very first thing when it comes to our two-step trading system is we have to know what the current structure of the market is. The only type of market that I like to trade is a bullish market, and that means that structure has to be bullish. This happens when price is breaking out, making higher highs, and when it pulls back, it makes higher lows. This is a very healthy market to be trading. And what we want to do is focus on buying at these higher lows or these pullbacks because we're going to be getting in at a discount versus overpaying. And this is how we find our smart money zones, which you will learn in that course. The smart money zone specifically is going to show us where that area of interest is to buy. But more importantly, it's going to normally be the lowest that we're going to see the stock pull back to because institutions are going to step in when they're getting that significant of a discount. So understanding this, let's look at what was happening to the CleanSpark chart at this time. If we take a draw tool, you'll see that structure was bullish. Price was breaking out, pulling back to a higher low, breaking out again, pulling back to a higher low, breaking out again, pulling back to a higher low. So this means that we're first meeting that criteria of bullish market structure. Now, the second thing is that we have to take our Fibonacci retracement from that swing low to that swing high. And that's going to be how we get this smart money zone, which is going to be where we're looking to enter a position. This would give us a smart money zone right here between $9.50 to $9 and an institutional buy zone directly above that up to about $10.35. So this right here is going to be our major area of interest. Now, from this point, price will have to break out to the upside, or if it ends up breaking this previous low, we walk away from the position. Now, obviously, price ends up bouncing and breaking out massively. Since we called that smart money zone, the stock is now up over 94%. And I need you to understand that we're not just cherry picking this. For instance, one of the best trades we've had this summer was Reddit, following the same system. AMD, following the same system. Robinhood, following the same system. Zeta, following the same system. SoundHound, it goes on and on. Now, the reason that I did take some of my profits off of the table, I initially had about double the amount of shares that I'm currently holding at this point. is simply because we came up into this oversold condition. You can see that these are the shares I took off the table. I've been taking some off as we've been breaking out, but I'm still holding on to a good portion of them. Now, the second aspect of our strategy revolves around taking profits. As price is pushing up into these deviation bands that you can see here, the first one being this white one and the second one being this red one, this is normally an indication that price is overbought. And in most cases, when we come up into these deviation bands, price is normally going to reject pretty soon. And in most cases, come back down to test a higher low, and then we're going to play that breakout again. So the fact that we pushed up into this resistance level here gives me the indication that there's a pretty good chance, probably 50-50 at this point, the price is going to reject pretty soon. And I don't want you to really think about trading as getting out at the exact point of rejection. I want you to think of taking profits as, what is my current risk versus reward? How much more can this break out versus how much am I risking if this rejects? Right? For instance, if you were trading CleanSpark back here in June, you would have made a 60% profit to just give the 60% profit back. That's not what we want to do. We want to not just hold through these downturns. We want to take profits when we are overbought and then get back in at better price points. So if we look at CleanSpark right now on a daily chart, I think that there's a pretty good chance that we could reject between 18 to best case $23. This is why I took half of my shares off of the table. My plan here is that if price just rejects, at least I've taken some profits. I think worst case scenario, price would pull back down to $13, $14, and then we're just going to do this all over again. But the reason I still kept half of my position on the table is because if we go parabolic, best case, we could run another 35%. Now, I need you to understand the compounding aspect here. 35% is from where we are right now to that second band. But the difference for my position goes from a 93% profit because of where I got in at, all the way up to a 160% profit. So the difference for me is not 30% from my entry, it's 64% from my entry because it's compounded. So this is why I'm still holding on to a decent amount of my shares, because if we break out to the upside, I still want to have exposure. And you can see here that if we actually zoom out to the higher time frame, such as the weekly, that first deviation band is up around $24, which goes in line with our best case scenario. So I'm going to continue to hold on to half of my shares, continue to play this breakout. Worst case, price rejects. I give some profits back. That's fine. I've already locked in a good portion. Best case scenario, price continues to break out and I still make some more money. I hope this video was helpful. If you want to learn our entire strategy for free, the link to our trading library, all of our indicators, our exact entry and exit requirements are there completely for free. I'll see you all next time.